the first session of the day, The Changing Face of Gold Imports in India. To moderate the session, may I invite Mr. Rajesh Khosla, Chairman Emeritus MMTC PAM India, to come on stage. The panelists are Mr. Nirakar Chand, Diamond India Limited, Mr. Rashid Ebelson, OECD, Mr. Johnson Lewis, Scotia Bank, Mr. Sunil Salunge, SGS Gold Private Limited.
So, two riders, please. A, we are not dwelling on the unofficial imports into the country. And B, we are not dwelling on the duty paid gold that comes into India for the purpose of export. We're only concerned with the gold that comes in on which duty is paid. It does two things. It generates revenue for government, and of course, it gives business to agencies nominated by the RBI. So, have a look at that. You've got the yellow line above, which tells you what is the amount of duty paid gold that came in year by year since 11-12. It tells you, the blue line tells you how within that the element of bullion has varied. You will notice, perhaps to the dismay of some people, that the element of bullion that's coming into India is steadily declining. However, this is being compensated by the growth of domestic refining. And in the financial year 17-18, you would see that domestic refining is about 45% of India's total gold import. Surprisingly, when you analyze April to June, you find that the refiners have now overtaken bullion import. You find 68 tons of gold content. This is gold content. This is not the weight of doré. Has come in as compared to 48 tons of bullion. So for the first quarter, we are seeing the refiners have overtaken bullion banks and bullion imports. Now, if you see this trend going further, you need to ask a series of questions that how is it going to impact various players in the value chain. So let's try and do a snapshot as to how I believe change will come about. Let's look at domestic banks. It's very clear to all that the business of consignment is history, or will become history very soon. And as the refiners keep on increasing their share in the market, banks will downgrade themselves, I'm being aggressive, to being the swing element. If there's a huge jump in domestic demand and refiners have a certain capacity and a certain amount of doré they get, therefore just the balance will be done by banks. Even their ability to do the balance, of course, will depend upon their ability to compete, because refiners, we've seen, have been very, very aggressive in domestic pricing, aggressive to the extent that quite a few banks are saying it doesn't make sense for me to do business. So what happens to banks then? Then banks will say, let me focus on stuff that I can do where I don't have competition. Refiners are unable to do gold loans. So we expect banks will focus more and more on gold loans, be it gold loans in domestic or be it gold loans for exporters. They will have to graduate to offering the complete bouquet of bullion banking services. If they don't, then I forecast that out of the 18 or 20 or 22 banks that are permitted, more than half will die. And I think if you made a projection year 3 from where we are today, I don't think you would have more than 4 banks left in the business, and all of them would perforce have to render bullion banking services. And if they do not render bullion banking services, they will be like the dinosaur, extinct. Quick snapshot as to what is bullion banking. Everybody likes to talk about it. I just thought I would refresh memory as to what I believe a bullion bank should be doing. And this kind of sets the pace for some banks in India either to do this on their own or tie up with counterparties overseas to be able to do it. What happens to nominated agencies? Like banks, they will have to reinvent themselves. They will either die or they will come up with something. Uh, Consignments out, focus on gold loans. They can't do gold loans in the domestic market. The RBI does not allow them to do so. They can only do loans for exporters. So will they focus on loans to exporters, and how much will that be, and is it going to be a viable business? Question. However, should they be aggressive in structuring Dore financing? Should they be aggressive in facilitating Dore procurement by virtue of the tag Government of India behind their name, as distinct from individual refiners who may not be so well placed? So from a regulatory perspective, is there a window of opportunity for them? Nominated agencies will take a call and see what they want to do. And I think if they need to survive, they will have to proactively push the gold monetization scheme. Otherwise, like a few banks, they will be dinosaurs. What happens to overseas suppliers? Are you losing interest in India? I believe you are. I believe you've sort of reached a tipping point stage. Is it worth my while to worry about what happens to India? Or do I have other markets that I should focus on? I believe progressively overseas suppliers will have no option but to tie up with one or more banks in India and collectively offer the full range of bullion banking services, which will mean that they, along with banks in India, will need to go to the RBI and get approval for offering the entire bouquet of bullion banking services. I also believe that they will get more and more involved in financing mine Dore, financing. They could also get more and more involved in sourcing mine Dore, depending as to which is the refinery they choose to do business with. What happens to these refiners, these guys who are playing up hell into the system and forcing change? Currently, they can't do domestic gold loans, but who knows? Tomorrow is not far away, and there may be a rethinking on that process. But the key to it is that suddenly refiners have become market price setters. It's no longer banks that took an LBMA price and added the premium and said this is the price. No, now the refiners work on a different game altogether. And I think all of you have noticed that it's sometimes difficult to read the mind of a refiner as to what he's going to do in terms of pricing. When it suits him, he can be extremely aggressive. When it suits him, he can start selling at a discount. However, on the flip side, as the domestic refining grows, they will attract regulatory attention. Today, they don't, but tomorrow they will. They will have pressure to comply with responsible gold. They will have pressure to comply with a good delivery standard, be it an LBMA, be it an India good delivery, time will tell. But the bigger you are, the tougher it gets. And as MMTC PAMP, I think we know what all that means. Now, these refiners are going to come to banks and say, please, I need bullion banking facilities. Get your act together. Get bullion banking in place. So banks are going to face pressure from refiners saying, get me bullion banking, get me the unallocated local London account, enable me to transact in metal, forget dollars. You're going to see that kind of pressure building up. You're also going to see pressure for ability to export gold from India, because there are times in the year when the market doesn't buy. Refiners have long-term contracts. What will they export? Will it be India good delivery, LBMA? Who will they export to? Matters of detail. But bottom line is there will be a greater regulatory attention to how refiners do their business. So that's something for refiners to either embrace or worry about. What about the other guys who are in this business of bullion, the commodity exchanges? Suddenly you find that, I don't have the LBMA gold coming in to be able to deliver on the exchange. So I suspect commodity exchanges will aggressively push for an India good delivery. And I suspect that a spot gold exchange will be fast-tracked. Bullion merchants, we have one on the panel. Like banks, they will need to reinvent themselves. They simply cannot carry on like this. As far as jewelers are concerned, we don't have many here. I think jewelers will pressurize refiners to be compliant because jewelers will also face compliance. And therefore, the value chain needs to be compliant. Great forecast, but there is always the unknown. What's the unknown? Um, Today, we've got a 13% duty on bullion, 10% customs duty, 3% GST. As the duty comes down, this supply-demand equation is going to change. Is it going to happen tomorrow? Is it going to happen a year later, 2 years later? I don't know. But I think it's reasonable to caution when you look at this presentation that the unknown element over here is the customs duty. Watch that closely. I don't think customs duty will change for the next 2 years, but I'm happy to be proven wrong. I think there will be a greater focus on domestic mine development. I think the country will wake up and say, I do need to mine gold domestically. I also think GMS is going to get a totally new look. And the key players in the GMS that are currently excluded are jewelers, and I think we will see a scheme where you will see more and more jewelers coming in, which in turn will pressurize banks because why shouldn't I have a metal account? And finally, of course, will banks look at a start-stop business? When there's a demand, I bring in consignment. When there isn't, I don't. Will the overseas supplier have patience with the country? I don't know. So I just thought I'd give you a preamble to this, and now, of course, I'll start. The key element in this, let's start with the top of the chain banks. Johnson, how do you see this? Johnson Scotiabank.
Yeah. So from where I see this is, banks have, this is something that banks have been facing since the time, gold has been, liberalized. When we were the first, initially we had about 10 banks who were allowed to import gold, and since then there's always been changes that I've seen in the last 20, 21 years, and it is nothing new for banks to see changes coming in where there's been a competition. Earlier there used to be premier trading houses, star trading houses used to compete, then nominate agencies. So it's something very common for the banks. Over the years we've always had some competition. There have been times that there have been self goals by the other guys where we've again come back and done business back to the to the peak. So it is not something new for banks where we have had to go through this phase. Yes, I get your point that banks will have to look at things completely differently, look at completely giving products and services across the value chain, and also completely giving them products that will help. For example, Dore financing, and looking at tying up with overseas counterparts and trying to structure some transactions, the local banks themselves. So that definitely is something that the banks will have to work on and look at opportunities, because in these times there is obviously when there are challenges, there are obviously lots of opportunities that come our way, and the banks will have to be focused in trying to see what comes their way, and they may have to look at reinventing themselves in the way they want to structure their business. It is obviously not going to be as what we were doing in the past. Banks have been completely satisfied with the way they were doing the business in terms of their agency type of business. Now again, they will have to come reinvent themselves and look at how they can structure their business differently. I think the key things that the banks will have to look at, the local purchase, getting involved in the local business. Right now, it's only import and sale.
I need to get other panelists because I'm going to come back to you with a follow-up. But basically, a bank like Scotia is saying, I suspect he's saying, thank heavens. Thank heavens, I now have the opportunity to actually do what I wanted to do rather than just being an intermediary in the supply chain. I hope that's what you're saying. Chan Saab, as a nominated agency, how do you see this? Would you need to take the mic, please?
Okay, these are very pertinent questions which came up in your presentation. I have a slight different take on this. For me, it is not so much about the commercial viability of the bullion business of the banks and agencies, but more to do with regulations. When we say changing face of gold import, it involves a time span. And if you look back, this time span of gold import over in India can be divided into three parts: the pre-licensing period, the licensing period, and the current liberalized period. So the pre-licensing period, as we know, that we did not have gold stocking or gold imports. Why licensing? Because the gold is a quasi currency and it has monetary implications. That is the reason why RBI wanted the banks and agencies to import gold. It is not that the banks and agencies have a core business in gold. It is only the government and RBI wanted banks and agencies to come into gold. So this is a very important point. Now, with the refiners importing gold, they have done a very commendable job in capturing 50% market share. But as you rightly said, that the way that the regulators wanted comfort by engaging banks and agencies to import gold, the same degree of comfort has to come from the current players of regulators, sorry, refiners, in order that the imports can proceed on this direction, that is import of gold or dore as a commodity and not as a currency. When we look at dore or gold, it is all the same. Whether it is 91%, 95%, both involve outgo of dollars, both involve some amount of employment. But for the government and the regulators, what is important is whether the monetary policy implications and the CAD implications, these two things are being taken care of while permitting imports. Now, coming to the specific question that what will happen to the nominated agencies, as I said, that again it is the RBI which has asked nominated agencies to import gold, and if this trend continues that the government permits imports of dore as a commodity, then there is absolutely no issue with the nominated agencies. Their role may cease to exist. That is
Okay,
part.
so you are in a sense tossing the ball in the regulator's court, saying, "Listen, I started this because you told me to. Tell me to stop, and I will stop, or I will, over a period of time, make my own decision and see whether I want to do it or not."
Basically, when we say whether the banks and agencies will continue in this business, whether they will evolve into bullion banks, whether they will give you a slew of gold products, whether they do niche products like metal loans and all, I have my own doubts.
All
For
right.
the simple reason that any business would require a core quantity. The volume should be such that it makes commercial sense for the entity to do this business. Suppose somebody does a 5 tons metal load. Okay, whether the suppliers will be interested in a 5 tons quantity sending to India?
So, Chansa, basically, what you're saying is wait and watch. Let's see how this pans out.
I think as long as it is a regulation driven, I would not say that whether this will go this way or that way. Suddenly, you will give a shock to the government or the regulators, and they will come out with something that let us
Fair.
continue.
Can I move on to Sunil, bullion dealer? Are you a dying breed? If you look at this projection, if you believe that, listen, it's not going to happen like this, I still like to think that the world won't change. How do you see it, Sunil?
I guess bullion dealers have always been on the
Receiving end?
Yeah, receiving end for a long time. Anything comes up, I think it stops with us, whether it is the 80-20. It was a good thing for many people, but I think the bullion dealers found it a little tough. So policy changes, ultimately, I guess bullion dealers find it tough. But I don't think that we are a dying breed, though we have many new things coming up, especially with the spot exchange and all that. Dore has brought in a completely new perspective to how we do our business. Earlier, we would deal with banks, we would deal with nominated agencies. Now with Dore, the only issue is there is no consistency in pricing. You get up every day with a new thing, something new comes
Welcome
up.
to the new world.
Yeah. So I guess what we look here for is opportunities, but these opportunities are also being stemmed day by day. Yeah, but we need to innovate, and I guess most of us are on the path of innovation also.
Super.
Thank
Rashad, this one is for you. I projected that as the domestic refining business keeps on growing, and I think it's now perilously close to reaching a critical mass that it must one day attract the attention of the regulator. From an OECD perspective, and I know you've been in dialogue with various ministries, you've been in dialogue with various trade bodies also as part of the responsible gold guidance. How do you see this developing from an Indian refining perspective?
Right. Yeah. Thank you. So everyone kind of already briefly touched on the subject, and that's to fully realize this major opportunity that is sourcing doré. You have to source it responsibly. That's the best way to fully realize this opportunity. And why is that? You know, 3 reasons that we like to say is, I mean, first, and I don't want to gloss over this with the business case, especially in God's own country. It's ethical. It's the right thing to do. But beyond that, the business case is banks and insurance and insurers are increasingly concerned with managing risk. Identifying and addressing risk is at the core of responsible sourcing. And greater market access internationally and domestically. The OECD represents 60% of global GDP, and our members are committed to the highest standards of responsible sourcing. The US, the European Union, Switzerland, they all have already incorporated responsible sourcing standards into their laws for certain sectors. And we've seen, studies have shown that especially young people are willing to pay premiums for responsibly sourced products.
So, just sticking on to that point, when you look at what kind of doré is coming into India, that accounts for now 250 tons of gold content being refined, approximately half of that is responsibly sourced, because half of that is sourced by a company called MMTC Plant, which is an LBMA good delivery refiner, and therefore is responsible gold and has its audit. However, there is a concern amongst refiners, and we need to address that concern, saying that, you know, we are not as big as the big boys, and therefore, perforce, we go to artisan and small-scale miners for sourcing doré. And whereas we believe our business is ethical, we are unable to demonstrate all the requirements to establish that actually it is ethical. And there is a concern amongst refiners that is this going to be a death knell to refining in India? Because if the regulator insists on responsible gold, then I would imagine temporarily, till they get their act together, you may see a dip in the refining volume in the country.
So here's the thing.
And nobody likes to be driven out of business.
Right. So here's the thing. Our standard was developed by business and for business, and it was developed to be practically implemented. No one expects 100% compliant, responsible gold overnight. You would know this. You're LBMA certified. It's about a progressive approach. It's about understanding what you can do depending on the size of your company. The expectations are different depending on the size of your company. It's understanding what you can do. It's publicly reporting on what you're doing. And it's about making slow progress year by year. If year 1, you have 10% of your supply chain mapped, year 2, we expect you to report 12%, then 15%. And then showing over time, you're progressively getting better.
So you're looking at a progressive compliance. Correct. As distinct from a draconian one-time window compliance.
Exactly.
Which I think should comfort whoever refiners are sitting over here. Johnson, I need to come back to you. You know, when you look at bullion banking, part of it would be that you would get involved in domestic sourcing, which currently you're not. Now, as an international bank, you have fixed criteria as to what you will source and how. But do you see, when this window opens for banks to be able to source domestic gold, Do you see this as one more pressure point for refiners to become compliant?
Yes, definitely, because if a bank has to, you know, buy locally gold, he will definitely need to, tick all the boxes in terms of ensuring that they are compliant and responsible sourcing. So one important criteria will be if a bank wants to deal with, the local refiners, he will have to have these sort of, things done completely, so that, only then the banks will be able to deal with, these.
Okay. So that's one more pressure on the refiners. Sunil, from a bullion merchant's perspective, um, do you worry about the quality of gold that you get from local refiners? Because when you were sourcing earlier from banks, there was no question mark on quality. But now you're increasingly looking at local refiners being your source. Uh, what concerns would you have as a bullion merchant when you do this?
Yeah, this is 100% sure a worry. It's a big worry for us because we are the end point of the chain. So we are the ones who supply to the jewelers or whoever it is, and we are answerable for the products. Nowadays, uh, the transactions happen so quickly. There's just no time for accountability. You just can't go back. I can just quote you an example. I had a jeweler call me and ask me, he used to buy regular consignment from me. So let's just take an example of 10 kgs. He came one day and he gave me a payment for 10 kgs and he asked me to issue 10 kgs plus 2 grams. I was like, what's this? So I'll give you 10 kgs payment, but you have to give me 2 grams extra. And the reason he gave behind this is, it seems at some point of time, when he picked it up from some refiner directly, he got 100 milligrams extra per kg, or whatever it is. So we need to emphasize
So,
on this.
question back to you. If that is your concern, why are we not seeing bullion merchants getting their act together and being part of the change process, saying, I love refining in India, but I need it of a particular standard?
We do
Why are
insist-
you, as a bullion merchants community, not fighting that cause?
I guess the community is itself looking for survival. So when you look for survival, it's very tough to sit and ask for accountability through your
So
dealers.
what you're saying is sometimes business convenience is over.
Because we just don't have
overload.
the time. So the payments have to be run so quickly. The transactions happen so quickly. There's just no time. But yes, we are insisting on it. There have been instances when we've stopped doing business with such refiners, and this is a big cause of concern, which is being addressed.
Chan Saab, as a nominated agency, and let us project a scenario where somewhere down the line, the regulator also permits you as a nominated agency to be able to source domestically. How would you address that situation? This is just, looking into the future. Hypothetical, granted. Can I request you to use the mic, please?
See, basically, I put banks and agencies in the same bracket, although they have different regulations slightly. But we are supposed to follow the RBI regulations also. First question, the question that is there, that how do we respond to sourcing the domestic?
Yes.
Okay. I think the mindset will be an issue. For somebody who has been doing 20 years the import of gold and supply, either for the banks or the agencies, to think of sourcing domestic gold will be an issue within themselves and so far as the controllers are concerned. For somebody who has worked over 25 years in the banking system, I can tell you that the banks internally, the top management would not understand anything of bullion banking, anything of the gold products, unless it is a specialized bullion bank. They are only comfortable with the plain vanilla import of bullion and supply. they would not go beyond that. And there also it is not very easy for them to convince them.
So again, you're sort of reinforcing the belief that you will either have to adapt to change or you will die.
Obviously.
Okay. Rashid, how do you, are there case studies that the OECD has done? Because India is not the first country that's going through this. So it would be, do you have case studies that you can sort of demonstrate and say, listen guys, we've been to country X, Y, Z, we face similar issues, this is the roadmap we've used and this is how we suggest you do. Do you have something like that?
Yeah, certainly. This work was initially kicked off in Central Africa, in the DRC, in Rwanda, and Burundi. We expanded the work now to Latin America. We're working closely with the Colombian government. We're seeing it happening in the Autorité Liptako Gorma, so that's Burkina Faso, Mali, Niger. We're seeing it working more broadly, and in Dubai as well.
And you could share some information on that, or is that confidential?
No. That's all open. All of our reports are available online.
It's on the public domain.
Yeah, and we can share that more broadly with the members.
Now I'm running out of time. I've tried to give you a little insight as to what I think 2021 has in store for you. Open for questions, feel free to ask. Anonymous, suggestions for bullion merchants reinvention. This one is to you, Sunil. What they're saying is, what are you going to do?
Okay, let's get this very clear. We are the people who have the liquidity, okay? Refiners can't go to banks, nor can anybody else go to banks. So we are the people who have liquidity, and that's how we do it. So I guess we have to innovate in trying to be the medium between the jeweler, the end user, and the refiner or the bank. So I guess we have to look at how we can finance.
Let me just toss this one from the top of my head. What do you think will be the casualty rate for bullion merchants? 50%, 60, 70, 20? Take a guess.
I guess it would be between 30 and 50.
All right. Okay, let's move on to the next one. It says, will refining scenario change if the duty differential is removed on doré? If so, is the current growth of refining at the risk of discretionary changes? We don't have a refiner on board, but I can maybe put on that hat. The right time for any change in this discretionary duty on doré is when the banking system in India gets its act together and provides the entire range of bullion banking services. So that whether I'm a refiner in Switzerland or whether I'm a refiner in India, I have access to the same level of facilities that I would get if I was in Switzerland. The time to really ask this question is, I've provided you the bullion banking services. I've given you a global level playing field. Now is it the right time for me to remove this duty differential? And I would venture to say yes. But till then, refiners have lots and lots of issues. At times, the 0.65% does not compensate for the issues. So I would really link it to the availability of bullion banking in India. Bring bullion banking into India and remove the duty differential, and then you're fine. That's my take. India is the only market. It's absurd that consumer market trades at a discount. We should stop differential duty structure. I think I've tried to answer that. Let me give you a parallel. Look at copper concentrate, look at copper, and look at copper smelting and copper refining. The big boys in copper are Birla and Vedanta. When you import copper cathode into India, the customs duty is 5%. That's like bullion. However, when you import copper concentrate into this country, and copper concentrate has been coming into India for about 20 years now, the customs duty is 2.5%. So it is global government policy to differentiate the duty between import of the finished product and import of the raw material. And you have a similar example. Look at the automobile industry. You have a differential duty if you buy a fully assembled car. You have a differential duty when you buy it in a semi-knockdown condition. Because it's government policy to encourage development in the country, economic growth in the country, have value add in the country. So on the face of it, it may appear different, it may appear uncomfortable, but I submit you need to take a slightly broader view at this stage. Markets should reward players with a level playing field. Right now, it's not. Markets change. But we've got 4 players over here. I'm going to toss it to them one by one. Markets should reward players with a level playing field. Right now, it's not. Johnson?
Obviously, it's different. While ROM, like a Dore is obviously having a 0.65% benefit, while if I bring a bullion bar, you have to pay a premium. So definitely there's a difference. That's the reason banks can't compete in this market, because there's a differential. So what the point the gentleman who has made it is obviously right in terms of saying that there is a differential, and that's the reason there is this sort of skew towards going.
What we would expect a bank to say is, all right, this is not a level playing field just now. I'm going to make it level. I'm going to change the way I do my business. I'm going to make a level playing field. Whether the avenue for me is to do the entire range of bullion banking, and I suspect it is that. Sunil, how do you see that differential? Yep, I know I need to get that. I'll just finish this one.
As a bullion merchant, I don't think we'll ever have a level playing field concerning this. It's going to be very difficult for us to.
So you see continued stress.
Yeah.
Chan Saab, aapki kya raay hai? The mic, please. The question is, how long is this lack of a level playing field going to carry on?
Regarding the duty differential and level playing field. Okay, it's a very pertinent question. So far as it is compensating the cost structure is fine, but the question is, why should it trade at a discount? Now, when it trades at discount, even if you have 10 kilos gold with you, then as long as the price is not set right, then another 1 ton cannot get sold, because the consumer is confused at what price he would buy. The third point here is whether the refiners can become more efficient in the process, not to depend on the.
So one of the suggestions is, over a period of time, just bring down this differential. Rashad, I know this doesn't address, directly relate to you. Have you seen this kind of scenario overseas, where you have domestic refining within domestic mining, in countries that you talk about?
Not similar to this. No, India is unique, unique case in terms of market dynamics.
So that's what I have. Thank you very much. Very patient audience. Thank you for coming. Big round of applause to them.
Thank you. Can we please put our hands together for Mr. Rajesh Khosla and the panelists? Time for us to present the mementos to everyone. So request Sir Rajesh Khosla to present the mementos to the panelists. Mr. Nirakar Chand, Diamond India Limited. Mr. Rashid Abelson, OECD. Mr. Johnson Lewis, Hoshia Bank. Mr. Sunil Salonge, SGS Gold Private Limited. And now I would request Mr. Sunil Kashyap, MD, Asia Pacific Hoshia Bank, to come on stage to present the memento to moderate of the session. Mr. Rajesh Khosla.